A key prerequisite for initiating a position using most strategies is to initially identify the trend. In this example, we find multiple upward price movements, yet we also notice several downward shifts in the price. Upon examining the price action more closely, we can observe that amidst these movements, there were candlesticks heading in the opposite direction. Heiken Ashi candlesticks offer a solution to this issue, as they smooth out regular candlesticks and minimize market noise. After introducing Heiken Ashi candlesticks into the chart, we notice that the price action becomes smoother and market noise is significantly diminished, making it easier to understand whether the trend is bullish or bearish. While Heiken Ashi candlesticks are excellent at clearly indicating a trend, they have a major limitation that hinders their full potential. The issue lies in the fact that Heiken Ashi candlesticks do not display the actual close of the candlestick. In addition, Heiken Ashi candlesticks may deliver imprecise market analysis when the market experiences low volatility or choppiness. This implies that the smoothing effect could lead us to overlook crucial price movements. To address this issue, the smoothed Heiken Ashi indicator can be employed, which displays smoothed Heiken Ashi candlesticks in conjunction with the price action. The way we can add this indicator to the chart is by clicking on the Indicators menu and typing Smoothed Heiken Ashi. Select the indicator made by SamX. Now let's open the indicator's inputs. The Smoothed Heiken Ashi indicator is highly customizable. First of all, it offers the ability to change the time frame for the Heiken Ashi candle calculation. The default value is to use the current chart time frame, but altering this will allow you to have the indicator reflect a higher or lower time frame. For example, if our current time frame is 5 minutes and we change the Heiken Ashi time frame to 1 hour, the indicator will reduce noise. In order to declutter the chart, you can also uncheck the Heiken Ashi wicks. Some traders prefer wicks as they can be an excellent indicator of a range in the market. We like to keep this option disabled. The next customization option is the price input smoothing length. The higher this number is, the smoother the Heiken Ashi candles become. We like to set this value at 15. The smoothed Heiken Ashi indicator works a bit differently than the regular Heiken Ashi candlesticks. The main difference is that the smooth Heiken Ashi indicator plots the Heiken Ashi candlesticks as a moving average. Now let's see how we can read the indicator. But before that, if you are looking to backtest your own strategies, you may want to check out Trader Edge. It's used by thousands of traders to backtest their strategies. If you sign up via the link in the description, you will also receive over $470 worth of bonuses, including a step-by-step backtesting plan, a course on building a profitable mechanical trading strategy, and 4 high-quality pre-made strategies. Click the link in the description to access all of these free bonuses and a 7-day free trial. There are a few ways to analyze the indicator. The easiest way to do it is by looking at the color. If the smoothed candlesticks are pink, the price is going down, and if they are white, the price is going up. To be sure the trend has changed, wait for a couple of candlesticks in the opposite direction to show up. Another powerful way of reading the indicator is by looking at the price action position relative to the smoothed Heiken Ashi candlesticks. You will often notice that when the current market trend is bearish, the price action will trade below the smoothed candlesticks. When the trend is bullish, the price action will usually be trading above the smoothed candlesticks. As you can see here, the price crossed above the smoothed candlesticks. In other words, once the candlesticks turn white, there will be a high probability of the uptrend continuing. In addition to trend reversal trading, the indicator can also be used in trends following strategies as well. It is for this reason that smoothed candlesticks can act as dynamic resistance and support levels. In this example, we can see that during the downtrend, the price frequently moved up to the smoothed Heiken Ashi candlesticks before rejecting them and continuing in the downward direction. In this case, we see that the market is currently in an uptrend because of the white smoothed candlesticks. However, during this uptrend, we can see that the price made multiple pullbacks to the smoothed Heiken Ashi candlesticks. Once these pullbacks were made, the price continued in the upward direction, showing us how the indicator can be used to spot support and resistance zones. Another good indication of price momentum is the size of the candlesticks. When the market is heavily trending, the Heiken Ashi candles usually become larger. The opposite happens when the market starts consolidating. Now that we know how the indicator works and how we can read the indicator, let's take a look at the different entries that can be made with the indicator. We are currently looking at Euro-US dollar on the 5 minutes time frame. Here the market was trending upwards. Then the momentum changed. The smoothed Heiken Ashi candles became pink. However, we cannot open a short position yet, as the market is consolidating. Our goal with this strategy is to wait for a sharp move to the downside first. This way we know that the bearish trend has been established, and that is exactly what happened. A strong bearish candlestick broke below the previous low. Support became resistance. In order to enter a short trade, we wait until the price retests the Heiken Ashi candles, which act as double resistance. Only after such a retest can we confidently enter a trade. For this strategy, use a risk-to-reward ratio of 1 to 2. Set the stop loss slightly above the Heiken Ashi candles. The same scenario occurs in the following example. In this case, the price has formed a new low after breaking below the previous support level. Then it retested the Heiken Ashi candles and continued moving to the downside. In this example, the price was trending to the downside. Then the price broke above the Heiken Ashi candles and they turned white. But this is only short-term price fluctuation. We cannot be sure that the bullish trend has been established yet. The same thing happened right here, and the market continued its downward move. In order to enter a long trade, we first want the price to break above the most recent high, or a resistance level. Only after that we wait for a pullback to Heiken Ashi candles. During the pullback, the price must not break below the white candles. This is very important. For the take profit, we will be targeting a recent swing high, aiming for a risk-to-reward ratio of at least 1 to 2. As we can see, the trade played out very well. Okay, we're currently on the 15 minutes time frame. Let's enable the smoothed Heiken Ashi wicks and show you a couple of more examples of how we can use the indicator for trade entries. So, here we had a strong bullish trend. The Heiken Ashi candles were positioned below the price. Then market started losing its momentum and it entered into a short range. The Heiken Ashi candles turned pink, but since we've already learned, a short trade cannot be taken yet. We wait for price to break the support level first, which is exactly what happened. Then the price retraced to the Heiken Ashi candlesticks, which acted as a double resistance. As soon as we see a sign of a continuation bearish trend, we open a short position. We target the previous low. As you can see, the trade was very successful. These trade setups happen very often. Your goal as a trader is to identify them as soon as possible. Make sure you follow the rules we just taught you. If you have any questions, feel free to ask them in the comments. In conclusion, smoothed Heiken Ashi candlesticks is a powerful indicator that allows us to combine Heiken Ashi candlesticks with actual price action. Traders, if you enjoyed the video, please leave a like and subscribe to Magic Indicator Strategies so that we can keep making these free videos.